What is going on, traders? Welcome back to the Traveling Trader. Moderna makes the stock market go crazy today, really in the last couple of days. But in this video, we'll be talking about mRNA stock, Moderna, and specifically how we exploited the stock options market on Moderna to make an insane amount of profit. And the purpose of this video is just to show you what's possible with the options market and how you can exploit certain trends in the market. I'll also go over DPZ, which is Domino's Pizza, NiKoLA options, as well as our main Tesla option play for the week. Let us get right into it, but for this we'll need to hop over to the computer because it's much easier to display and talk while I'm showing you what I'm doing. Let's get it. Moderna stock, otherwise known as MRNA, makes the stock market go crazy today. Actually, the last couple of days, you see all travel stocks are up. Here's Royal Caribbean Cruise Lines, RCL, is up, what, like 21% today. Jet, which is the airlines ETF, is up 7.75% today. And this is all because Moderna's vaccine is ready to advance to the final phase of testing. And apparently all of the test subjects that they already tested had a positive immune response. So essentially today in the stock market, all of the recovery stocks, which include travel, retail, etc., all of those jumped up, while the stay-at-home stocks really remained stagnant. So I'm going to go over Moderna stock analysis, ticker symbol MRNA, and show you how we made a killing trading Moderna stock options. Then I'll go over some of our other options plays, Tesla, DPZ, and NiKoLA, to name a few. Insane option premiums there. I'll show you how we exploited the market when implied volatility was high. Essentially, when implied volatility is high, stock option premiums are also high, and you can exploit the market, and the stock doesn't even really have to move in order for you to make money, depending on what type of position you get. So let us get right into it and go over Moderna stock analysis, and I'll show you the option plays. So here's Moderna's stock chart, mRNA, and you can see that it has a habit of testing the moving averages on the way up. Now, I had sold a put spread on mRNA on Moderna back around June 2nd, and I'll show you that play right here in my Thinkorswim. So it was an at-the-money put spread that we sold, the 65.60 put spread, and we got $3.30 credit for this. Now, the max value that this can be is $5. It's the difference between the strikes. So we got $3.30 out of $5. Now, the reason I did this is because if you look at the chart, it bounced off of the 50 moving average. Now, I expected it to see a rally similar to these bounces off of the moving averages. However, it really stagnated for quite some time because there was a pause in the vaccine news cycle, right? So initially my expiration was July 2nd. So around June 25th, when we had, about a week left till expiration, I realized that I might actually lose out on this trade because Moderna had to expire above $65. So I looked at what the premiums would be if I rolled it out to July 24th, which is next Friday. And I actually got 10 cents more credit to roll it out. So I didn't even have to pay to roll it out. And you could see here on June 25th, here is my message in our trading group. And by the way, if you want access to all of these trades, link is in the description where I send this out. But I said rolling my Moderna vertical spread that expires July 2nd to July 24th for 10 cents credit. That means I got an extra 10 cents on top of the $3.30. So I actually got $3.40 now for the July 24th expiration. So my thinking and analysis there with Moderna was the same, and I just needed more time in order to execute, right? Because I saw that it wasn't falling below these moving averages. So I actually got paid to extend it to the 24th. And you could see yesterday that the stock popped 4%. Today it popped another 7% on the news that I just mentioned, and we are now above $80. And remember, I had the 65.60 put spread. I sold the 65.60 put spread, meaning it needs to be above $65. And if you look at what the 65.60 is worth today, it's essentially worth 47 cents, and I got paid $3.40 for it. So essentially $3,000 for every 10 contracts of Moderna. That's my current profit. Now I can hold it and wait until expiration and collect, if it expires above 65, collect the additional 47 cents remaining, or I can close it out and collect $3,000 per 10 contracts that I sold. This is why options trading is so viable. And if you know what you're doing, you can exploit the market a lot more than just buying and selling stocks. And your moves don't have to be astronomical. In this case, yeah, I needed Moderna to expire above 65 and it's currently above 80. So it's well above the price range that I needed to expire over. But the move can be incremental. So if Moderna expired at $65 and a penny, I'd still collect 100%. So if you know what you're doing doing with options, you can put yourself in a situation where you have to be generally right and you don't have to be significantly right in your analysis. Now, I'm thinking about doubling up on this and getting a little bit greedy. And here is my strategy for doubling up on this. I want to sell a call spread as well on the other side, and this creates an iron condor. So I collect the premium for a call spread as well. Now, selling a call spread is bearish. So if I feel that Moderna is going to get capped at, say, $100, and I don't think that it can go above $100, I can actually sell this 105-100 call spread on Moderna and collect. Let's see how much I'd be able to collect if I sold it today. So I can collect an additional 34 cents per contract, or $34 per contract, or $340 every 10 contracts by selling the 100-105 call spread on Moderna expiring the same time. So I would collect an additional premium of $340 every 10 contracts. Now Moderna would have to close below $100 in order for me to collect this, but I already got the 3,400 per 10 contracts on the put side, and now I'm just looking to get greedy and play with house money. Now, one of the reasons that I would do this is because of the increased open interest on Moderna for the July 24th contract. So 3,400 more contracts on July 24th, which is the date that my options expire. And you could see here that there's just a bunch of short buildup, meaning that traders are expecting to short Moderna at these strike prices. And you could see that there's short buildup at 80, there's short buildup, you know, between the 74 and 76 strikes. This could be a precursor to people dumping their Moderna shares. And we've seen these cycles before on Moderna. It's not like, you know, the stock is super consistent after these spikes. Every time it spikes, you see these crashes, like I said, back to the moving averages. Another spike here, another spike here, another spike here, and we have one now. So I could see why traders want to take advantage of another potential spike, because Moderna is one of these companies where it will release some good news related to a vaccine, but then that news dies down and the effect that it has on the stock market dies down. So I definitely want to take advantage, like I said, of those potential call spreads and add more premium to my position, collect an additional $340 for every 10 contracts that I sold on the put side. So I might open this 100-105 call spread tomorrow. And again, if you want access to the trade alerts, link is in the description, where we go over all of these strategies. If you have no idea what I'm talking about and you're interested in options, then definitely join our group today. All right, another options play that I had was on NiKoLA. These NiKoLA's options are just ridiculous. The amount of premium that you can get, because it's so volatile and has such an insane amount of volume. The amount of premium you can get is just ridiculous. So I ended up selling the 53.5, 53 put spreads for 40 cents. Now, again, if you don't know how to quickly calculate the max value of these spreads, it's a difference between the strike prices. So between 53.5 and 53, you have 50 cents worth of premium. And I collected 40 cents of that, right? So essentially getting 4-to-1 on my money that NiKoLA expires above $53.50 by this Friday. Now, it's currently at around $55, so looking good. Obviously, anything can happen in a couple of trading days. So if it doesn't, what happens if it doesn't close above 53.5? Well, if it doesn't close above 53.5, then essentially I'll lose 10 cents per contract, and that's about it. I can also close these out because I got 40 cents. They're now worth 10 cents. So I have 30 cents of premium left in them. That's $300 every 10 contracts that I had on NiKoLA. So this play is essentially a no-brainer. All right, a play that I sent out on Monday was on DPZ, which is Domino's Pizza. Volatility was so high that the 365-370 put spread was selling for 90 cents. So we got 90 cents of premium, and it's currently worth 55 cents. So we already collected about $400 every 10 contracts on DPZ. And if it expires above 370 on Friday, by Friday, like this Friday in 2 days, then we'll collect the rest of the 55 cents. So essentially $900 per 10 contracts if Domino's Pizza expires above 370. And if you're wondering, it's currently after market, currently is trading at around $418. Now, its earnings are coming up tomorrow before market, so we'll see what happens. But I think we built ourselves a good cushion here. The delta is only at 0.11, meaning we have an almost 90% chance of collecting the full premium on this. Now, another thing I did to get a little bit more greedy is I sold the call spread the 445, 450 call spread for 0.6 for 60 cents, which is an additional $600 per 10 contracts. So I sold that on the call side. So now, you know, I'll collect the premium on the put side, hopefully, and on the call side, as long as it closes below 450, or sorry, below 445, then I get to keep that additional $600 per 10 contracts. These are the types of creative things that you could do with options. No other derivative, in my opinion, gives you this type of leeway, this type of flexibility. And lastly, I'll give you my Tesla play. This one I sent out on July 10th, so last week, end of last week. Volatility on Tesla was going crazy, so we ended up selling the $12.95 1300 put spread for 57 cents or $570 per 10 contracts, expiring July 17th, which is this Friday. I can't believe we got 57 cents out of this because Tesla is currently still trading above $1,500. So all Tesla has to do is expire above $1,300. It could be, again, 1,301, and we collect the full premium. And this is currently up around 85%, I believe. So we can close it early if we wanted to, or wait until Friday's expiration to collect the full 57. Moderna stock analysis one more time and see where I think it'll get to. Like I said, you know, Moderna does have these short news cycles, so I do think that it'll hit a top here at some point, unless some new news comes out. This could actually be the top here, and this could be, you know, this could be a double top right here on Moderna, and we could essentially start to see it trail down back to the moving averages where it does make sense to buy, or even, you know, trade options in a similar fashion to what I just showed you. Now, there is a bullish crossover here on the MACD as well. So, you know, even if it does retrace a bit, I do expect Moderna to be in this upward trajectory until, you know, at least it announces that the vaccine is ready for production. As long as that's still in the bag, you know, as long as Moderna doesn't scrap their vaccine program or whatever, or some bad news comes out or somebody dies during the trial, God forbid, then you should expect Moderna to be on this upward trajectory until a vaccine is released, and then it might even spike. However, I don't think it has anything else that's attractive for it to see parabolic growth. I think this gradual trend line here is what, you know, is what's in store for Moderna. So we'll see these spikes when these news cycles come out, and then a retracement back to the moving averages, and then, you know, further spikes, et cetera, and this can continue. So maybe I'll sell another at the money put spread if and when it does fall back to either the 50 moving average or the 21 EMA. Anyway, that is it for this video. Go ahead and leave it a thumbs up if you get anything out of this video. If you want to learn how to trade options and would like one-on-one training with me, I only take a handful of people every month. The spots usually go fast by the first of the month, so hit me up on the Discord or find me using one of the links in the description. Leave a comment, let me know what stocks you guys are playing. Are you in Moderna? Are you in any really interesting options trades? Leave it down below. I'm always interested to read those. Oh yeah, and by the way, that person who picked on semiconductor as part of the sweepstakes, you guys know that I do sweepstakes every month where I pick a random comment and go all in on this Webull account based on the person's comment that I picked. So this month somebody picked on semiconductor, and it is currently up $43.20, up 4.67%. I put about $1,000 in there. I bought 45 shares of on semiconductor. So, you know, hopefully it keeps going up, and I will give that person the profits from this trade. Stay safe out there, traders. Peace.